the interest level in stock markets is at a peak. From teenagers to retirees, many have entered the stock market arena in the past year. The good news is that all of them will have a much bigger investment canvas soon. Besides domestic stocks, they will also have global stocks to choose from. Both the National Stock Exchange and the Bombay Stock Exchange are readying a new platform which will allow domestic investors to transact in global shares with the same ease as when buying a share of, say, a Reliance or an Infosys. The move will allow domestic investors to gain direct exposure to the world's biggest companies such as Apple, Microsoft, Alphabet, Amazon, and Facebook, which are all listed in the US. Retail investors have a fascination to invest in scripts that have a small price denomination. So the shares available on the proposed platform will be in the range of $3 to $5 under the fractional ownership program. In other words, you will not have to shell out $500 to buy one share of Netflix. Instead, you can just spend $5 and buy 1/100th of a share. Still confused? Let me explain further. In India, you need to buy at least one share of the company. But in the US, they have a concept of fractional ownership where you can buy a fraction of a share. So, for example, Google's share price is over $2,000. Now, not everyone has that much money, so they can buy 1/100th share of a Google for only $20. The same concept will be made available on the proposed platform. Now, the National Stock Exchange is planning to launch trading in top 50 US stocks in the first phase at the Gift City, which is an international financial services center created on the lines of global financial centers in Dubai and Singapore. These 50 US stocks will cover most sectors such as technology, banks, pharma, and FMCG. Domestic investors will have to use the liberalized remittance scheme limits of up to $250,000 each financial year as prescribed by the Reserve Bank. So the first question that comes to mind is, what about the transparency and cost? Well, right now, domestic investors get exposure to foreign stocks through a broker who has a tie-up with an international broker. Under this method, shares are held in the omnibus account of the international broker. But on the proposed platform, all depository receipts will be held in the demat account of the customer. NSE officials claim that the process of onboarding and transacting will be a lot easier than we have under the current setup. So what about the taxation burden on domestic investors? Well, the government provides for several benefits, such as exemption from capital gains, security transactions tax, and the stamp duty on trades coming from gift. All these benefits will also be extended to domestic investors transacting in Gift City. However, investors will have to pay taxes on profits that get repatriated from the Gift City account to the onshore or regulator bank account. Transacting at Gift City will require the opening of separate bank and demat accounts with an intermediary registered at Gift City. The proposed platform will be regulated by the IFSC authority, a unified regulatory body for all entities operating out of Gift City. We hope the proposed platform will be transparent, inexpensive, and easy to use for someone who wants to invest some of the world's best stocks with minimum risk and maximum return.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.